Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, March 31st, 2020. We are in the final hour of the trading day and the final day of the first quarter of the year, which has turned out to be a doozy, hasn't it? I mention this each day, but in my opinion, the best time to make your buying and selling decisions is at the end of the day, just as close as you can get to the close of the market during the day. During the regular trading session, you have the day traders and the algorithms battling it out. I consider it a lot of noise. At the end of the day, in the last hour, and particularly in the last few minutes before the market closes, the large financial institutions step in. They take control away from the day traders and the algorithms. My opinion, they have the best they have the best information, they have the best technology, they're dealing with the most money, and they move the prices to what they think are the most valid prices. And that is why I make the majority of my buying and selling decisions based upon what they're doing at the end of the day. So anyway, thank you so much for coming. It's so great to see everybody every day. I always look forward to it. I think we have such a great group, so many good comments and observations, and it's great to see everybody. So thank you so much for coming by. I really always do look forward to it. So hey, it looks like Kamal is here. Hey Kamal, good to see you, my friend. Appreciate you being here, and look forward to our lesson tonight. Mount Doji is here. Hey buddy, good to see you. How you doing, Mount Doji? What's happening? Marco is here. Hello Marco, good to see you, my friend. Hope you're having a good evening in Slovenia, in Europe. Hope you're staying safe over there and life is good. All right. Well, interesting day today. The Dow is currently down 139 points, down 0.61%. We were up quite a bit earlier on, and we have given it back. NASDAQ is up down 17 points, down about 1/4%, was up earlier as well, and S&P is down 19 points, down 0.72%. That was up earlier as well. So, as I mentioned, where we are in the charts, especially on the indexes, we've come off of that low from the 30 RSI. We've been struggling. We've gotten close to the 50 RSI. We've been struggling with it. Haven't been able to break through that. In my opinion, we either need to break strongly to the upside on some volume, break above the 50 RSI, give us some support below us. But right now, that 50 RSI is above us, and we have been rejecting it. So, my opinion, we need to go up further. We need to break strong to the upside, or I think it's likely that we might give some back, even possibly test the lows. I mean, of course, I don't know that, but it's definitely a possibility. You look back statistically when you have these big down moves. Yes, you do have these bear market rallies, but very often you can go back down and test that low. But who knows? We'll just do what the charts tell us to do. That's about all I can do, right? Joe Turner, how you doing? Good to see you, my friend. I think Joe has a poem for us, and he does. Joe Turner says, "Candles on the charts move around very sneaky. We wonder why the SPX can't break the 200 weekly. I think she's going to bend over and lose her golden crown. Be prepared, people. This market's going down." Well, there you go. That's kind of about just what I said right before I even read the poem, right, Joe? Joe's so good. He can just make these on the fly, and not only can he just make them on the fly, they're just so dang relevant, Joe. Thank you, my friend. I appreciate that. And if you don't mind, I'm gonna post that. So let me save that there. That's really great, Joe. Candles on the charts move around very sneaky. We wonder why the SPX can't break the 200 weekly. I think she's going to bend over and lose her golden crown. Be prepared, people. This market's going down. Hey, Zach. Good to see you, my friend. Hope you're doing well. Thank you so much for coming. Always nice to see you. All right. Well, listen, this is the plan for today. As usual, we're going to first off start with the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them going forward. I have a mix of directional positions, overnight SPY trades, I have some calls, I have some puts, and so I'll explain everything going forward. Although I did get out of my 2 put positions today, but I'll go into that. And then a few of you were nice enough to share some of your trades with me, so we'll take a look at those and we'll see what's happening there. After that, going to do a few minutes on trader psychology. Always the most important skill, in my opinion, of all of tradingdom. Right? It's important to learn how to trade. It's important to identify support and resistance levels, entries, exits, indicators, all that kind of stuff. It is very important because from that you can develop a plan for yourself, and you need a plan. But following your plan, it's a whole other story. It's much easier said than done. Just like, I've brought up the diet analogy before, but we all know how to lose weight. Yeah, we eat better food, we eat less sugar, we exercise more. Okay, pretty simple. Is it a good plan? Oh yeah, it works. But can we do it? Do we follow it? Some people do, some people don't. It's really a lot like that in trading. You can develop a good plan, but whether you can follow it or not is up to you, and it usually comes down to emotions, fear and greed, and making money and want to take it, and losing money and not wanting to lock it in because you don't want to be wrong. These are all pitfalls and all temptations that we struggle with as traders. So that is why I do like to talk about trader psychology every day, and so we'll spend a few minutes on that. After that, we're going to go down through my watch list, go through one by one. Whenever I look to enter a position, I have 3 requirements. Requirement number 1, have to have a confluence or a combination of indicators lining up on at least 1 time frame, and ideally on 2 time frames. I look at indicators as groups of buyers, different groups of buyers. If you want to put yourself in the position, have the best chance to have a profitable trade, you want to be in the company with as many other buyers as possible. So if that is the case, then looking for a confluence or a combination of as many indicators lining up on 1 time frame or multiple time frames is putting yourself in the company with as many other buyers as possible. Doesn't mean that trade has to go up, but you might as well start off the trade with an edge in your pocket, having multiple groups of buyers at your entry. Secondly, you want to make sure you have a good risk to reward ratio. If I'm going to risk $100, I want to make sure I can make $200 or more to the upside based upon valid support below me and realistic resistance above me. So that's step 2. And step number 3, very important, make sure you do not have too many correlated positions. You don't want 3 or 4 technology stocks. You don't want 3 or 4 healthcare stocks, right? You want to divide it up between different industries, give yourself some diversification. I have a rule that I can only have 2 technology stocks at one time. I can only have 2 healthcare stocks at one time. And to expand on that, I can have 2, but I can't buy 2 on the same day. So that is my rule. Second rule, account heat. I never want to have more than 60% of my account at risk, even in diversified positions. And that's the maximum. Doesn't mean I'm supposed to have 6. That's just the maximum. Usually 2, 3, 4 sometimes, right? So those are the 3 requirements. I'll go through. If I find something that on the surface looks good, I'll go ahead and mark it. At the end of the day, I'll take a look at all the candidates, if we've marked it down to 3 or 4 or 5, and then I'll spend the rest of the day trying to narrow those candidates down to really the best one. What has the most signals? What has the most confluence of indicators? What looks best on both time frames, right? So then I'll try to narrow it down to 1, 2 at the very maximum if they're uncorrelated, and then I'll go ahead and take the position at the end of the day. If we have something at the end of the day, if there's nothing, then I'll just sit on my hands and do nothing, because that's what you're supposed to do. You want to wait for the trade to come to you. You don't want to force a trade. You want to make sure everything lines up, and if it doesn't, don't just trade for trading's sake. You're much better off just being flat, not having positions. If the trade isn't an A trade, we talk about A trades. A trade isn't A trade. You don't want to start dumpster diving in the B minus in the C plus and the C's or the D trades, right? So anyway, that's the plan. Then after the market closes, if anybody has any questions for me, please let me know. I'm happy to answer them. Happy to answer any trading questions that you have. I'll do my very best. If you'd like me to take a look at some symbols, stock symbols, I'm happy to do that, give you my humble opinion there. If there are any positions that or any symbols that you think would be interesting for the group to look at, or if you think that they would be helpful for the group to look at and would like to get my opinion on the stock chart, I'm happy to give it to you. And I'll do my very best to get to it before the market closes. But please make sure you put a star by it so I know that it's time sensitive. So, all right, well, that is the plan. So if you could please hold on for about 40 seconds, I will be right back. And here comes that legal disclaimer. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Gamer Squad's here. How you doing, Gamer? Good to see you. That's our friend Dave from Colorado. Hope you're having a good day. Hope everybody's staying safe out there. All right, well, let's get to it. First of all, gold. So I did buy gold back here on the 26th of March. I bought it when we had the 520 EMA crossover. This is a good long-term back-tested approach to trading gold. The great thing with these crossovers is that just because they cross over doesn't mean it's going to be a profitable trade. But the way these are set up, they're set up to get you out quickly if you're wrong, and they're set up to have you stay in them for a length of time if you're right. Remember, the key is to have small losses. Of course, you're going to have them, right? But the key is to limit your losses and have a system that identifies when you are wrong, and with the possibility of having a large gain, right? That's the equation for profitable trading. So that being said, I did buy gold here at 153.75 when the 5 EMA crossed over the 20. My trade plan for this was if it went up, rejected the 70 RSI, that would be my initial profit target. To the downside, which is always the most important, this is my plan. If you remember mentioning this yesterday, I'm going to get out of half the position if the price closes below both the 5 and the 20. Currently, it's definitely below the 5. Currently, the 20 is 149.31. We are at 148.95. So at this point, I would have to go ahead and get out of half the position. Now, could I get out of the full position here? Sure. Could I stay in this and not get out here and just stay in as long as the 5 is mechanically over to 20? Sure. But I like to vary things up a little bit. I don't like it to be all or nothing. So I am going to have to get out of half of my position here, just half, if the price closes below 149.37, which it looks like it's going to at this point, but who knows? I'm going to have to wait till the end of the day. Then I will keep the other half until the 5 EMA crosses under the 20 EMA, or I have a 5% loss, whichever one comes first, because that's my emergency. So anyway, I did take a half a position on this. I mean, it's a losing trade, but I'm glad that I did take a half position, and I took a half because the volatility is so high, right? And so if the volatility is high and I take a half a position, that's the same as me taking a full position when the volatility is low. So I hope that makes sense. But again, if this closes below 149.37, I will go ahead and take half of the position off. SPY, world famous. All right, real quick. I know you guys hear this every day. Guys and girls hear this every day, and I apologize, but just in case we have a new viewer today, I do want to quickly go over. This is from Lizanne Saunders on Twitter, at Bespoke Invest. This is a long-term back-tested study to trading SPY. I do buy the SPY every day at the close. I hold it overnight and I sell it first thing the next morning. Now, why would I do such a thing? Well, it's based upon the results of this back test. This back tested two approaches. Approach number one, buying the SPY at the open, holding it through the day, selling at the close. If you did this every day since 1993, you'd have returned a negative 13.9% return for all that work. However, if you do the opposite, which is what I do, buy the SPY at the close each day, sell it first, hold it overnight, sell it first thing the next morning, positive 634.2%. So a huge difference between buying it at the open, selling it at the close, or buying it at the close, selling it the next morning at the open. Past performance is no guarantee of future results. Boy, that is certainly true. And this approach here has been a wild one in 2019. Fantastic results this year. Horrible results, but you have to look at this in the long term. You can see over time the equity curve on this approach has gone up and up and up and up and up. There are drawdowns in the middle, and that's what I'm going through right here at the moment. But I continue with this. I do have faith in this. The back tested or the results of this back test really do speak for themselves, but there are times with just a lot of drawdowns, which I'm going through right now. Really important on this, I only take a 10% position size at my maximum. And good thing, could you imagine if I was using 100% this year? I would have got clobbered, but I only use 10, and actually right now I'm only using 5% because it's under the 200-day, and also the volatility is so high. So the last week's been pretty good. I've had some pretty good trades on this, but yesterday I bought it at 261.65 and sold it this morning at 261.70. So about 95 cents overnight that I lost. So not too big of a deal. Glad that I did get out when I got out, because we are definitely lower than this. I will be buying again a quarter position size. Excuse me. Yes, a quarter position size. Today at the close, and sell it first thing the next morning. Just noticing right here, I was talking about the market coming down, testing the 30, bouncing back up, which I would expect. But whenever you make these lower lows, you can expect a rally, but you don't really expect that rally to just be a V formation and go right back up. Generally, we go down, test that 30, come back up, test that invisible 50 RSI above us, which has happened here. And that's why I was saying that I'm a little concerned about this market here. This is the S&P 500, but we need a big, strong move up, get above that 50 RSI, so we have that 50 RSI as support underneath us, or go down a couple days, try to catch a higher low V1, V2. That would be good. I don't know if Miko 25 is out there, but we had a lesson last night, and that's what we were talking about. We were doing a lot of higher low V1s. So a higher low V1 might be interesting here. What I'd really like to see, I'd like to see us test this bottom, have a double bottom with a bullish divergence. We'd have an ATR divergence. We'd have an RSI divergence. We would have all sorts of divergences. So for the market's sake, I think a test down here would be fantastic, but obviously I don't know if that's going to happen or not. So, all right, XLF. I did buy XLF back here on the 24th. I bought it at 1987, moved up nicely, got up about 9%. Luckily, I did take some profits along the way. Of course, everyone knows that, anytime the market goes up a certain amount for me, I do take shares off. I want to sell shares when people in the market really want them from me. Not the entire position, but just part of the position. It helps me hold on to the winners longer, and it also makes me feel better about getting out. I will always get out somewhere near the high on a portion of the shares. We got up here. It did not test the 50 RSI. If it had, I would have gotten out of it. Currently, right now, it has moved more than one ATR away from my entry. So currently, I am in trailing stop mode. If we close below yesterday's low today, on a closing basis, I would go ahead and get out. If we reject the 50 RSI to the upside, that would also be a signal for me to get out. But so far, let's see, this here is 2060, so it is possible. it is possible that I would lock the profit in on this trade if it closes below 2060. So I'm definitely going to have to keep an eye on that one. Okay, that's the directional trades. Apple, I did buy a position on Apple. Where did my... Yeah. So I bought a call on Apple. It's a defined risk. It's out to June 18th of 2021. So a long time in this. My stop here is, last week we had a V1 to the upside. Here's bar 1, bar 2 washes out bar 1, closes above. My stop here on this call, if I had on the weekly, if I closed below halfway of this washout bar, just like any other trade, my initial profit target is up here at 305. If we rejected that and closed below, then I would go ahead and just take profits. I did buy the 6/18/21 Apple 250 calls. Right now it's at 252.96, 99. So this is what it is considered in the money. Disney. All right. Well, I did take my profits on Disney today. I did sell puts down to $50, expiring in January, $375 per contract, which was really good premium. I did go ahead and take it off today, actually right near the top. Was near a 50 RSI, and it was having problems with that 20-day moving average. So I made about almost half of what I sold in premium. So the most I could make was to make another half by waiting 9 months. I made half of that premium in about 10 days. So just based upon where it was technically, based upon that I made a large percentage of what I was going to make on the premium anyway, I went ahead, locked it in. But that was a really good trade. And like I said, I was fortunate enough earlier in the day just to get it at the top. Qs, same thing. I did sell Qs down to 130, expiring June 30th of 2020. I did go ahead and lock in those profits today. We got right up to the 250-day moving average, and we rejected the 50 RSI. So I said, you know what, that's enough. I've made a huge portion of the premium that I'm going to make instead of having to wait for another 3 months, having to only be able to make another 50% by waiting months and months and months from a technical standpoint. So anyway, I am out of Disney. That was a really good trade. I'm really glad I took that trade. And Qs, again, I got out of that trade as well. So I am really kind of paring down my positions here, locking in some of the profits that I had. Let's see, gold's not looking too hot, is it? All right, let's go over here. Okay, gold, here is same trade that I took, Stephen Burns took here, up here at 56.28 with the 5 EMA crossing over the 20. That's the signal. It doesn't work every single time, but overall, you know, like I mentioned before, it gives you the chance of some big wins and gives you a structure to get out quickly if you're wrong. I'm not exactly sure what Steve's trade plan is on this one, whether or not he is going to get out because the price closed under the 5 and the 20, or if he's waiting mechanically for the 5 to cross under the 20. And oh, Steve is here. Actually, good to see you, Steve. Thank you so much for coming, buddy. Always nice to have you. Always an honor and a privilege. It's great to be able to have you in the chat. I mean, it's really, I mean, what a, you know, if I have to say so for myself, I think it's one of the coolest things about the channel is having Steve Burns in here. I mean, just amazing. Thank you, Steve. Hope you're doing well. Steve says, looks like the bulls are back in quarantine today. Yes, they are. A lot of confluences of resistance on my watch list near the 50 RSI and the 20-day moving average. Yes, exactly. That's one of the reasons I locked in the Qs and the Disney today, and the market's having a tough time getting up there. And you're right, that's the confluence. Steve says, I will be stopped out of my gold UGL position in this ugly sell-off under both key moving averages today, the 5 and the 20. Okay, so that's what I was talking about. I wasn't sure if Steve was going to trade this mechanically and just wait for the 5 to cross under, actually under the 20. But that makes sense. So we will have Steve out of this trade. My trade, very similar to this. I'm taking a little bit different approach though. I am selling just half with the price going under the 5 and the 20, and I'm going to trade the other half mechanically. So there's that. Okay, we have Bing He. Bing He bought Clorox back here, 175.05 a couple days ago. Yesterday moved up nicely for him. Today it's down a little bit. So Bing He, if you are out there, oh, there's Bing He. Hey, buddy, good to see you. Any changes or any actions on this Clorox trade, Bing He? If there is, let me know. Netflix, dang, here's another Bing He. This has been a good trade for Bing He. He bought this at 363.90 back here on the 27th. Moved up nicely yesterday, moved up nicely again today, but now we are red. What's the market doing? Oh, we're down 360 points. That's why. So if there's any change or any updates on this trade, let me know as well, Bing He. And then Joe Turner. Joe Turner did buy Bank of America yesterday, 21.99. It was up earlier. Now it's reversed back down. V1 to the downside, bearish engulfing bar to the downside. Looks like his trade plan was a stop at 21.10. I don't know if that was intraday or if it closes under there at the day's end. But Joe, if there's any updates on this, please let me know. Miko25 is here, late but here. Fantastic, good to see you. Hey, by the way, did that work with the Skype, with the web-based Skype link that we talked about? I hope it did. Let me know. Bing He said, should be keeping CLX and selling NFLX. Okay, sounds good. Sounds good, good, good. Again, real quick, you know, if like Steve was just saying, we have really run into the confluence on all the indexes of the 50 RSI lining up right with the 20-day moving average. Came down, rallied. This is kind of exactly where I thought we would find some resistance, and that's why I play from the 30 to the 50 RSI, from the 50 to the 70. So really here on the Dow, we need to break strongly above that 50, have that below us. Same with the Qs, got up there, hit the 50 RSI. Look at this confluence, Steve. We have a confluence of the 250-day above us right at about the same time we were at the 50 RSI. So definitely some confluences there. If the Qs close above the 250-day, that's a good back-tested approach. Doesn't have a high winning percentage, but it's a good risk to reward. So we'll watch that. And SPY, same thing. 30 up to 50, it's moving sideways. Either have to break to the upside or back down to the downside. We're looking at oil yesterday. We're talking about oil a little bit. We made this low, we rallied back in, we came back down, broke to a new low. Now, earlier today, we closed back up. Earlier today, it was a false breakout. But again, the important point is, for me at least, is seeing how this develops and how it closes. Yes, it was a false breakout to the downside earlier, but if it closes under, still it's not a false breakout because it would still be down here. One thing I do want to mention though, if we look at the RSI levels on oil, here's the low. See how low that RSI level is? Now see that we're lower than that, but the RSI level is higher. So the slope of the chart's down, but the slope of the RSI is up, which is somewhat of a good sign. It could be interpreted somewhat bullishly. So, okay. Been online with Skype help looking for video, but no success. So you did try it on the web-based Skype. We did a lesson last night, and he did the recording because we record all of my lessons, but for some reason he's not able to access the video, and so I suggested that he goes to the web-based Skype because I've done that before. I don't know, Kamal. Do you have any thoughts, Kamal? If you're out there, I know Kamal's good with tech, but anyway, okay. Well, we'll talk about that, and maybe we can hop on real quick and I can try to help you. Frank says, oh, here's a poem from Frank. Great. Past performance is no guarantee of future results, no matter who you are. Even a superstar can never escape the performance radar. For good results are our compensation, maybe even our justification. That's great. Past performance is no guarantee of future results, no matter who you are. Even a superstar can never escape the performance radar. For good results are our compensation, maybe even our justification. Bravo, Frank. Thank you, sir. Just amazing. I'll tell you what, being a writer and a poet is literally a skill. So it's just great. Thank you for both of you, both Joe and Frank. I'll get at a BAC if it closes under 2110. Okay, so it's holding right there. Yes, I tried web-based and also doesn't work. Dang it. Kamal says, I once got the recorded video on my iPhone and not on the chat client on the desktop. Oh. So maybe Miko, maybe you could try logging into Skype on your phone possibly and accessing it that way. Is that what you're saying, Kamal? Okay. Darn it. All right. So listen, everybody, before we go down through my watch list, before we take a look at any of my end of day possible trades today, using the 3 requirements, looking for confluence or combination of indicators on multiple time frames. Number 2, making sure we have a good risk to reward ratio with legitimate support underneath, realistic resistance above, and 3, making sure we definitely keep in mind correlation and account heat. Before we do that, I just quickly want to talk a little bit about trading psychology. There's some really, really good Twitter channels out there, really good Facebook channels out there. They do a lot of work. They burn a lot of calories. Very kind that they put out these good trading words of wisdom for us. And one of the best ones out there is our friend Thomas Payne at Trader T Payne. Thomas was a scientist who changed his career over into trading. So he uses a real scientific approach that he brought from his current occupation into trading, and he's very aware and knows the importance of trading psychology and all that means. But let's see what Thomas says. When you get scared and break your rules but end up getting saved by the market, you feel great, don't you? You shouldn't. You just taught your monkey mind a new trick. If we disobey our rules, good things can happen. And this is so true. We've all been there, right? Where we've had to stop. We were supposed to get out. We maybe didn't get out. Just watch it for a minute. And it went roaring back up. We're like, sweet, the market saved us, right? Yes, you feel great, but was it really a good thing? It was not. Because you broke your rules. The market saved you. And you really shouldn't feel good about that, because like Thomas says, you just taught your monkey mind, right? You just taught your monkey mind, that's your fight or flight part of your mind, a new trick. If we disobey our rules, good things can happen. You do that several times, and then you just think, I really don't have to follow my rules because I'll always get saved. Well, that is not true. That is not true. So, don't get too proud of yourself when you don't follow your rules and then the market saves you. You're much better off following your rules. And if it goes roaring back up, that's fine. But at least you can take comfort in that you followed your rules. Because in the long run, following your rules and following your plan is the only thing that's going to make you profitable in this market. There's going to be times where, it's going to save you, but it's just reinforcing bad habits. So anyway, thank you so much, Thomas. Appreciate that, my friend, and hope you're doing well. Okay, Kamal says yes. Mika says, I will give that a try. Thanks, Kamal. Thank you, Kamal. Kamal says, if you are logged in elsewhere on Skype, it shows up anywhere. Oh, good to know. Good to know. Thanks, Kamal. That's great. Whenever I have tech questions, Kamal's the first person that comes to my mind. So we have a lesson tonight. Looking forward to that as well. All right, well, let's see what's happening here. Dow's down 334 points, Nasdaq's down 88, S&P's down 40. So yeah, we're having some down days, or down. The selling is accelerating is what I'm trying to say. Okay, so again, just a real quick look here. I'm selling half of my gold position. The 520 is still in place, but the price closed below both, so I will be selling half here. SPY will be buying this at the end of the day. XLF, gonna have to watch this. This is getting pretty close to yesterday's low, 2060, so that one will have to be on my radar. And then Apple, of course, I have the long-term calls on Apple, so not too concerned about that. All right. So, listen, I'm going to go down through the watch list. Going to take a look at some potential entries here. Look at the charts. Look for some setups. But I do kind of like to show this every day now because it's real simple. Choose Wisely Today by Diana Cooper. I don't know who that is, but thank you, Diana. I don't think it's a bad idea before I look for trades, and I don't think it would be a bad idea for you either to read this or say this 3 times before you look for trades. Choose wisely today, right? You have to choose wisely every day, but how about just a quick little reminder? Think to yourself, do I really need this trade? Do I really need it? Is it really that good of a setup? Does it really have good a combination of indicators here, or do I want to just take it because I want to trade, I want action, right? We don't want to do that. We want to just sit tight, let the trades come to us. Take the trade only if it really makes sense, So choose wisely today on your trades every day. Make sure you have the setup, make sure you have the confluence, make sure you have the risk to reward, and also make sure that if you add this, you're not going to add correlation into your account, and keep account heat in mind, right? Me personally, never more than 60%, and that's the max, and I rarely have that. So anyway, I don't know who Diana Cooper is, but thank you, Diana, and thanks for reminding us this every day. Okay. Let's take a look-see. Apple. Well, again, Apple is finding that confluence of resistance at the 20-day EMA and also at the 50 RSI. So really nothing I can do with Apple here. Adobe, it's just, it's been above the 200, under 200, above the 200, under, above, below, above, below. So this 200-day moving average has kind of lost its real support. It's lost its strength and respect as a moving average here. So I really don't see anything here on Adobe. Amazon is down today. What I've been waiting for on Amazon, a good back-tested approach on Amazon, is when the 5 SMA crosses over the 50 SMA. That's a good long-term back-tested approach. Again, with these back-tests, doesn't mean it's going to be a profitable trade, but it gives you the structure to get out quickly if you're wrong, and it gives you the upside if you are right. And again, those two are very important. Small losses with the chance of a large gains to the upside. That's really what it takes. That's the formula for profitable trading. So the 5 has not crossed over, but when it does, I will take that as long as we're not too high, as long as we're not above the second ATR channel. Boeing down today. We had this huge sell-off, just gnarly sell-off. We've rallied back into the value zone. Miko, if you're out there, we've rallied back into the value zone. Now we've had a couple days off. I was looking for a possible higher low V2 today back in the value zone, but it doesn't look like it's going to trigger here at the end of the day. It would have to close above this day's close. So day 1, day 2, day 3, day 2 washes out day 1, day 3 would have to confirm and close over, but right now it's not. Berkshire Hathaway, same old story, bounced off the 30, finding resistance in the value zone, just looking for a pullback, a day or two pullback, and then a higher low V1, V2. Beyond Meat, pretty similar. I don't see anything there. Caterpillar bucking the trend though. Look at that. Look at that. Miko, you're asking me about higher low V1s or V2s. Are they valid if they're not in the value zone? Generally not, unless you have something like this here, where on this day we tested the 30 RSI. That would have been a good little buy right there with the intraday rejection and followed by a V2, but not a good V2. Day 1's bar is larger than 1 ATR. It did wash out nicely, but we had this big gap here. But in combination with the under 30 over 30, it might have been okay. But boy, here we are on Caterpillar. We're above the 1 ATR channel. I haven't seen that for a long time. So now I would be waiting for a pullback into the value zone, some sideways movement, look for a V1 or a V2. Dow Jones, again, Just same pattern. Need a strong upward move or a higher low V1 or a test of this bottom. Walt Disney. Boy, I've been in Walt Disney for a while, so I am out. I am out of Walt Disney. You know, this is a good example. I would have taken this V1 here yesterday had I not had Walt Disney, but we were below the -1 ATR channel. We rallied into the value zone. We had a couple days down. We had a beautiful V1. Here's day one, day two. Day two washes out day one, closes above day one's close, rejected the -1 ATR channel. Had I not had the puts on Walt Disney, I would have bought this today. Where would my stop be? Halfway the washout bar, right about there. So if I did take the trade, I would still be in it waiting for a close under. But earlier today, I was like, dang, I knew I should have took that. And now I'm glad I followed my rules and went, no, I already had Disney. Why expose myself to double risk on the same stock? Etsy, don't see anything on Etsy. Facebook up today, bucking the trend. On Facebook, I'm looking for a 1050 SMA crossover, but it's a long ways from happening. That's a good crossover. It back tests well on Facebook, but that's a long ways from triggering. Gold, oh, the big move on gold, 3%. So again, I'll take half of my position off today. Google, it's up today. I mean, it's definitely, the relative strength is pretty strong. But again, we're back in the value zone. I want to see a pullback for a day or two. Look for a higher low V1 or V2. Goldman Sachs, don't see anything there. Home Depot, just moving sideways in this little higher range here. You know, sideways bars, the more you move sideways, the more likely you are to break out one way up to the upside or to the downside. That will happen, but I just don't know what direction, and I don't know when it will happen. So not much help there actually. But you know, I'd like to get into Home Depot, especially if I could get a higher low V1 or V2. IBB down today, running into some resistance here at the 250 and the 200. Intel, see, the price has just lost respect of this 200-day. We're above, below, above, below, above, below. So you know, when you start seeing prices chopping above and below and above and below a major moving average, you have to look elsewhere. You have to either look on another time frame. You know, here the 200 week has acted as the price has respected that. So maybe if the price gets back down there, possibly that's the place to look. IWM, still holding puts on IWM for an account that I manage. Boy, this, tell you what, this is one of the biggest put trades I've ever had. We lost the 200-day. We rallied up to the 200-day. Now it was support. Bought those puts at 150, and now they're at 113. So glad I did that. Johnson & Johnson rejected the 200-day here. Again, looking for a pullback. CarMax down 2.89%. I'd like to see a test of this bottom. If we could get a test of this bottom, we would have a double bottom with the bullish divergence, with an RSI divergence, with a MACD divergence, with an ATR divergence, and a test of the bottom. Tell you what, that is really what I'm looking for. I am really looking for that double bottom. Ideally, you know, if the market goes up, great. But if it comes down and tests this bottom, that's where I will be getting more involved with additional positions and size. But until then, I just don't see a whole lot going on right now. Coca-Cola, no. Lockheed Martin, like to get back into Lockheed Martin, especially if we could pull back for a couple more days, get a nice V1, V2, 50% of the move from here to here would be about right here. So if I could get a pullback here, V1 or V2 trigger at the same time, it's at the 50% fib of this move, that would be excelente. But not there yet. MasterCard, don't see anything here yet. I was fortunate enough to buy some MasterCard calls here. I did get out of this about 4 days ago when we got right up here, tested the 50 RSI, and sold them for a nice profit. But I'm done with them. I am out of them. I'm looking for a directional trade. I'm looking for a higher low higher low V1 or V2. McDonald's, everything looks like the same chart. Merck, strong here. Look for a pullback, V1, V2. Microsoft is down. Look at that. It pegged the 50-day moving average right above us. Just pegged it perfectly, didn't it? Got right there. That's why on the way up, I tend to target a 50 RSI. If it loses the 50 RSI, I get out. If then it then rejects the 50-day moving average, if it's above, that's also a place to get out. Netflix, Bing He. Oh, it's back up for Bing He. Thank goodness. Good job, Bing He. Nike had that gap up. It's held this gap for quite a long time, but I don't see anything there. Philip Morris is up today. It was up almost 3% earlier here. Again, I'd be looking for a pullback or a day or two pullback and a higher low V1 or V2. PayPal, no. Q's, got out of those today, got out of those puts, sold or bought those puts back. Silver down today, but not like gold. S&P, going to be buying that at the end of the day. Teladoc, you know, we went above the value zone, into the value zone, came back up. Now we've made a lower high. So even if it came back into the value zone and I look for V1 or V2, whenever we come into the value zone, make a lower high, then I need to wash out this previous low. Mount Doji knows what I'm talking about there, right? Treasuries did close above the 1 ATR channel. I'd like to just see just a normal pullback into the value zone, some sideways movement. Look for V1 or V2. Tesla, technically it's a higher low V1. I'm sorry, higher low V2, but not a good one. Miko, right? We talked about this last night. Here's day one. Day two does technically wash out day one by not by a lot. Twitter, don't see anything on Twitter. Again, United Continental, it was looking to form a higher low V2. We went from the lows into the value zone. We came back down. Here's day one, day two washed out day one nicely. Earlier in the day, it had triggered a V2, but I wait till the end of the day for the confirmation, and now it doesn't look like it has it. Natural gas, nothing really going on there. United Healthcare Group has that resistance of the 200-day above. It's poked its head up there a couple times. It's now rejected the 250-day above it twice, so I don't see anything there either. Oil is up a little bit today. VIX. So, this is a good example of course, being very, very high. Now we're back into the value zone. Now we are moving sideways. So tomorrow, if we had a V2 to the upside, I could get involved in that. If we had a V1, a new V1 tomorrow, I could get involved with that. But again, these return to value trades are basically just mean reversion trades. They're buying the dip in an uptrend. This is an uptrend. Buy the dip in an uptrend to hopefully resume the uptrend, possibly challenge those previous highs. But you have to have a trigger that tells you when to buy the dip. Well, the dip is when it comes into the value zone, but the trigger is when you have a V1 or a V2. Verizon, rejection of the 50-day. Walgreens, looks like a rejection, not 50-day, excuse me, 50 RSI. Walgreens rejection of the 50 RSI. Walmart couldn't get above the 200. Energy Select here. Well, Energy Select, Miko, if you're watching this, we had a rally into the value zone. We did have a V1. We did have a higher low V1, but see how the V1 did not confirm and close into the value zone? So it has this as resistance above. XLF, ooh, might have to get out of this one. This one's going to be close. About 9 cents. So I'm going to have to watch that one at the end. Real estate, don't see anything there. Utilities, looks like that rejected the 50-day, the 50 RSI. Again, just looking on all these charts here, I'm basically looking for a higher low V1 now with the rejection of the 50, or a V2, or a pullback to value. Healthcare, 49.60 on the RSI. It looks like that did reject also. And then Zoom. What's Zoom doing? Zoom is down as well. So I don't see anything here, everyone. I really don't. The only thing that I'm going to be taking here is the overnight SPY trade and getting out of half of my position of gold, buying the overnight SPY trade, getting out of half position of gold, and watching XLF carefully. So that's that. So Steve is getting out of his 520 crossover. Bing He likely will stay in his Clorox. I think that's what he said, but if there's any change, let me know. Netflix is up for him, so I imagine taking that. And Joe, looks like it bounced right off of his stop and it's above. So from my understanding, he'll keep that. All right. Dan says, surprise, surprise, surprise. Look at gold. I can't remember, Dan. Were you saying that gold was going down? If you did, I can't remember, but you are correct, sir. You are definitely correct. All right, let me take a look, see over here. Okay, so 2 divided by 2, 146. Okie doke. So, anybody have any thoughts or anything they're looking at possibly today? Any changes they're making in any of their trades? Yeah, I just don't see anything here. VIX is right in that value zone, right there, but it is down again today, 5.5%, 5.3%. So, I told you this yesterday, but I was doing some reading on VIX, and right now it's in backwardization, meaning that the futures contracts in future months and in the future are lower than the price now. I think if you go out to July or August, you're looking at $30 VIX. So the people that are trading VIX are pricing in the future that volatility is going to be less, which does make sense. We go from high volatility to low volatility to high volatility to low volatility. We just don't know exactly when it's going to happen is the thing. So we have to wait for our triggers. So XLF is holding. It's holding 2060. So as long as it does, I will keep that. Dr. Jorgensen says, good hike, warm, but a little cloud cover in the desert. Dr. Jorgensen is like our weatherman near Palm Springs. So I always have a good feeling of what's going on in California near Palm Springs. Sounds good, Bruce. Have a good day. Have a good bike ride. Be safe out there. So we're 377 down on the Dow now. All right, we'll just wait this out, see what happens. I think what I'm going to go ahead and do, just for time's sake, is I'm just going to go ahead and get out of this half. Let's see. All right. All right, there's half of that gold. Okay. And there is half of that gold. All right. So that's all taken care of. I'll tell you what, it does feel pretty good to have lightened up on all these positions. You know, as we moved up here from the 30 to the 50, I did sell a little of this, I did sell a little of that. You know, with the MasterCard calls, and today getting rid of the Disney puts and getting rid of the Q puts. But, you know, I don't know if you trade options or understand options, but, you know, when you sell puts, you get a maximum amount of premium. Even if the stock doubles, triples, you still are only going to make that amount. But, you know, I got close to making half of what I could possibly make on it, holding all the way out to January. So that's why I decided to take half, especially in conjunction with where the technicals of the charts were, the 20 EMA, and then also the rejection of the 50. So it did make sense. I was glad to lock those in at the very least. Being He said, sold Netflix, small profit, grateful for that. Perfect. Always important to be grateful with your wins, right? Sometimes those wins are hard to come by. In this quarter, they've been super hard to come by. So, all right, Steve is out of the UGL position. Take that off. So all I have remaining here is I have Bing He's Clorox, which he's down on a little bit, but I don't know if his stop's been triggered. And then Joe's looking for a close under 21.10. But see, that's what it takes, Joe, right? You put your line in the sand. Of course, you don't know if it's really going to hold or not, but at least you have a structure to your trade, right? You need a structure. If it closes below, I'm out. That gets you out. That gets, you know, who knows, it might be $19 in a week. And, you know, he'll be glad that he got out. It might go down to 21.10 and he gets out, and then it goes zooming back up, which of course is not any fun, but you know, he followed his plan. Regardless of whether if you break your rules and buy something and it goes down, you're going to be mad at yourself for breaking your rules. If you stick with your rules and you get out and then it goes racing up, you'll be mad that you didn't stick with your rules. So it's an impossible game. You know, you're never always going to get it right. You're going to be disappointed whether you break your rules or whether you follow your rules. So really just try to transcend it, and after a while you just get used to it. It's just no big deal. You're like, oh, well, no, that didn't work, or oh, that did work, right? Oh, I'm glad I got out of half that gold when I did. All right, we're down to the final minute of the quarter. I think it's the worst quarter since 2008. How about that? Tell you what, that was the worst quarter I've had in a long time. I usually have profitable quarters, but this has not been a profitable quarter. But, you know, as I mentioned before, down this year, it's fine. I'm not trying to make it all back in 1 second. I'm just trying to mitigate the loss. At the end of the year, if I was even, I'd be ecstatic, right? But not every year is a winning year in trading. That's the truth, everybody. And more importantly, don't try to make back those losses quickly. If you do, it's a great way to just lose a ton more money. Be really aware of that, and take that to heart when I say that. If you've had big losses, don't try to make them back quickly. Most of the time, you're just going to make those losses even worse. Andrea says, bought back my Apple puts, 45% profit. Congratulations, Andrea. Very, very good. Yeah, I had some Apple puts as well. I bought those back a little bit more, but yeah, it's about in line with what my puts were on the Qs and Disney, with about 50% profit on those. So congratulations, Andrea. Nice going, and good to see you, my friend. Thank you so much. Okay, so where did we end up? Down 413 points on the Dow, 1.85%, 74 points on the Nas, down 0.95, and the S&P down 1.61. And on the SPY, 257.75. So I did get a little bit of a discount on that, didn't I? 257.75. Boom and boom, done and done. All right. So listen, if anybody has any other questions or comments or observations or like me to take a look at any symbols, I'm really happy to do that. Before I do that, I just want to put in my quick daily plug and let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. It's one-on-one. There's 5 sessions. Each session is between 2 and 3 hours, generally 3 hours. I can't remember the last time I did a 2-hour session, but I'm just giving you the option in case you get tired if you want to call it after 2. But it's basically 5 sessions for 3 hours. It's an intensive course. I teach you everything I've learned from my experience of trading for 24 years. I teach you everything I've learned from my coaches and mentors and teachers over the years, such as Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry William. I've studied one-on-one with all of them, and that's how I put together my trading approach. But I teach you everything that I've learned in the course from them. I think having the one-on-one courses excuse me, really does make a difference. You get the instant feedback from me, and you get me asking you a lot of questions and breaking down the charts. Basically, in each lesson, the first half of the lesson, I teach what I'm teaching. I teach the material that I'm teaching that for that session. The second part of that session, I ask you a lot of questions. We go through a lot of charts. We do lots of chart studies. I have you break down the charts. I ask you what's good here, what's bad here, profit targets, stops. How does this look on multiple time frames? There's a lot of interaction. If you become my student, just be prepared to answer a lot of questions, be prepared to break down a lot of charts. And we go through the charts one day at a time. Okay, what's your next trade here? To the upside, and what's your next trade to the downside? Where's your entries? Where's your exits? Where's your trailing stops? Where's your ultimate profit target? So it really is helpful. I really do think it is helpful. And I do record, or you record on your end through Skype. You do record the lessons. So this is the only time I think we've had an issue here with Miko 25 and him not being able to record it. But I have a feeling we're going to get that recording one way or the other. But anyway, most of the time you will have a recording so you can just watch it again and again and again. If you're interested in taking the lessons with me, this is a good time. People have a little bit of time on their hands being at home. So if you're interested in becoming a student of mine, just reach out to me. You can send me an email. My email is in the description below of this video. You can also send me a message on Twitter. And, before I take on a new student, I like to have an initial Skype call with them. It's totally free. There's no pressure at all or obligation. I just want to see if we're going to be a good fit as teacher and student, see if our schedules line up and so forth. But I like to learn more about you and your trading approaches and your challenges and your goals. And then you can ask me any questions. And then, if we decide, that it's a good fit, then we'll go ahead and we'll schedule the lessons. You can take them once a week or twice a week or 3 times a week, but I don't like to do them every night. I like to have you have a night to kind of process and ideally watch the video. So if that's of interest, please reach out to me. The course is $1,000, but I really do think that you are going to get, it's worth every penny. And I think when you get through with the course, you're going to be able to look at the market and be able to trade whatever kind of market we're in with good trading principles. And then, lastly, if you could be so kind and you like today's podcast, if you think the content is value, I really would appreciate it if you could hit the thumbs up button before you get out of here. It helps the channel. I've been having some issues with YouTube with them sharing my channel. I hope it's temporary. I really do, but you never know, right? That's the thing sometimes with YouTube. So having some likes definitely it couldn't hurt. Okay. Bing He says, Andrea, you were trading 10 years ago. Andrea says, yes. Andrea does everything, Bing He. She's a pilot. She's a business owner. She's a ham radio operator. She's a trader. She is just a woman with a lot of skills, right, Andrea? And a former student of mine. So, Andrea, we need to set up our follow-up call. So send me an email when you have a free night and we can schedule it. Bing He says, were you making a lot of money then? Yeah, I don't know. Kamal says, thank you, Greg. I will see you for the class later today. Right. I will speak to you tonight. Looking forward to that, Kamal. All right. And Miko25, I really hope that you're able to get that on your phone. And, we could maybe schedule something too. But again, I logged in there. I went to the chat. I found the video in the web-based Skype, and then I just downloaded it. So I don't know, maybe Miko can't find the video in the web-based. I'm not sure. Darn it. Andrea, Bing He says, Andrea, in case you're wondering, I'm just asking to confirm some strange beliefs someone mentioned to me about trading. There are a lot of strange beliefs about trading, that is for sure. Okay. Miko says, yes, still working on it. I will let you know later today. Okay, good. I really hope you can find that. Bing He, Greg, for Netflix, is coming to the recent resistance. Am I right to exit the trade since it rejected this resistance yesterday and today? Let's take a look. Well, honestly, Bing He, there is resistance up here at this previous high, but I don't see us, we haven't tested that. So I really wouldn't say we've tested the resistance. I mean, we've tested this price here, but it doesn't really line up with any price action resistance over here. And we have not rejected any 70 RSIs or anything to the upside. And we still keep making higher highs and higher highs. And it was green on a down day, so the relative strength was good. So honestly, if I were in this trade, I do not think, Bing He, that I would have gotten out here, because it hasn't tested this previous high. We're still making higher highs. We haven't closed below a previous low. We're still above the 5-day EMA, and we haven't rejected any high RSI levels up here, and we're still above the 50 RSI. So me personally, I don't think I would have exited that trade, especially with the relative strength today. Resistance is a zone. Well, yeah, but a zone, the way that I look at trading, Bing He, is I would look at a zone of a rejection of these previous highs, like a false breakout to the upside and down. So I would consider this a zone. I would consider up here at the third ATR channel a zone. I would consider a rejection of the 70 RSI a zone. So I agree with you there, but I don't see us testing any of those zones. Says here, Dow drops 400 points as stock close out their worst first quarter ever. All right. We got the worst one ever. We lived through it, which, You know, it's pretty brutal trading this month. I mean, really brutal trading this month. But, you know, if you have traded this month and you've taken a loss, or even if you broke even, or even if you made money, hopefully, but regardless of what happened, you traded through a historic month, which, even if you've lost money, has given you a lot of experience and to see some real huge market conditions. And probably going forward, I think most people going forward are going to be a bit more timid with their trading, I would imagine, after, you know, the carnage that we had this quarter. So I have a feeling that's going to affect markets going forward. A lot of people had never seen a bear market. A lot of people had never really seen moves to the downside that were so brutal, and now that they've experienced them, you know, once bitten, twice shy kind of thing. Andrew says, I made some good money back in the 90s. It was easy then. I got a little burned and got shy. Then with the 2008 recession, I got burned again since I was not paying enough attention. I was dealing with the cancer BS back then. Andrew says, I sold the Apple 21 premium back when you did, Greg. So did you? So you get credit for that. Oh, thank you. Thank you. Yeah, you know, I was speaking with a friend of mine, a really wealthy guy, and I've talked about him before. He has tons of Apple. And, you know, he called me the other day and he was asking really, you know, best move in the market, kind of big picture. And I told him, you know, my idea was that if we go back down and we test the lows, like I mentioned before, we're going to have a really nice double bottom with the bullish divergence. We're going to have all sorts of stuff if we get back down there. And I think it's likely that we would. But, you know, he says, are you going to buy then at that double bottom? And I said, I may take some directional trades, but I said, I will almost certainly sell more puts at that level with probably another 20, 25, 30% protection to the downside and get some real good premium. See, the market has moved up here, and so volatility has decreased, which is good for puts. But when you're selling puts again, you want the market to be coming down so the premium increases. So anyway, I'm glad. I'm really glad, Andrea, that you got that. And I am out of my puts. I'm out of all of them now. Bing He says, so the strange belief is true on year life then anyway. I haven't made good money in trading yet, so I don't worry about that now. You know, Bing He, you work really hard at trading, and I've seen some really good trades from you. I mean, since you've been here and I've been following your trades and kind of getting a feel for your trades, I've seen you be more selective with the trades you've had. You've had some wonderful trades. I mean, yes, you've had some down ones as well. So a couple of those shorts beat you up pretty good. I realize that. But just, you know, my honest opinion, Bing He, on your trading is that it's getting better and better and better. Bing He says, should have held on to Netflix. I made the mistake of taking profits too early, but document down this in my journal. Never mind. Learn from this lesson. Well, who knows, right? I mean, Netflix might just go down tomorrow and you'll be really glad. But honestly, you know, just trying to give you my opinion, it's in an uptrend. Higher highs, higher lows, moving up. Hasn't rejected this previous high, hasn't rejected third ATR channel, hasn't rejected a 70 RSI, and hasn't closed below the previous day's low, you know? So who knows? We never know. All we can do is have a plan. But I think you're doing great, Bing He. I really do, buddy. I think I've seen you improve really dramatically since we've started, especially in your trade selection. And I feel like you've gotten more conservative and more precise with your trading, and you really have a plan. So, you know, that's what it takes. Andrew says, I'm watching SMH right now. Ah, interesting. Yeah, it's like a lot of the other charts. I mean, 30s into the 50s, into the value zone, just moving sideways right here. I'd really, you know, if I was looking at this SMH, I'd love to see another down day or two, and then a rejection of the negative, you know, go down under the -1 ATR channel, which is the green line, go down, reverse back up, rejecting the -1 ATR channel and also triggering with the higher low V1 or V2 while the MACD is positive. So that's how I'd be looking at it. But that's how I'm looking at most trades right now. You know how I always mention before I leave, just try to go out and do something nice for somebody today. Go out and, especially in these times, just give somebody a call, see if they're doing okay, seeing if they need anything, which I am suggesting that you do right today. Just, I'm sure you know somebody out there maybe that's fallen through the cracks, that doesn't have a lot of friends or family or this or that. I'm sure they would really, really appreciate a call from you today, just to check on them. I'm sure it would make their day. But I mentioned that because yesterday I got a text from an old friend of mine that says, "How you doing? Anything I can do for you?" And I was thinking, was he watching the podcast? I don't think he was watching the podcast, but it literally was minutes after I, mentioned that yesterday that I got a call or I got a text with somebody asking me that exact same thing. And it was nice. I'm doing fine. I'm a little under the weather, darn it, right now. As a matter of fact, I'm not even sure I'm going to go hiking today. I think I might go back to bed. I woke up. So anyway, it's a little scary right now, right? But feeling pretty good, but we'll see. But anyway, I thought it was interesting that right after I said that, I got a text. I was like, I think he listened to the podcast, but I can't imagine he would listen to the podcast. Bing He says, I am more selective on my trades due to capital depleting. Ah, isn't that interesting? Yeah. I mean, that's your survival instinct kicking in because you don't want to lose your money because you want to keep trading. Think about that. That's kind of a deep thought, right? Now you're doing it because capital is depleting. You should always do it, even if you had tons of money in an account. Does that make sense, Bing He? The more selective your trades are, the more profitable you're going to be. That's all I can say. It is the truth. Andrew says, hope you're okay, Greg. Take zinc. Yes, ma'am. I do have some zinc. And as soon as I get done with the podcast, I'm going to pop one of those lozenges in for sure. But I didn't want to be speaking and sucking on a lozenge at the same time. So, all right. Well, if anybody has any final questions, let me know. Again, I really do appreciate everybody coming today. It's always nice to see you. Always look forward to it. I think we have such a great group. And again, if you don't mind, before you click out of here, if you like today's content, if you could hit the thumbs up button, I would really appreciate it. Bing He says, Greg, when we get older, we tend to think about things like old friends, etc. Haha, is a different stage of life. That's true. That is definitely true. I am definitely in that stage of life as well, Bing He. All right. Well, I think we're going to wrap it up. Should be interesting to see where we move here. I mean, obviously we can go up or down. Today was, actually, let's look at the volume today. Dow Jones had a little pickup of volume on the way down. The Qs had a pickup on volume. SPY had a pickup on volume. So that was the other thing. We rallied on a lot of these indexes and a lot of these stocks. We rallied up, but not on high volume. See on the way down how high the volume was? And then on the way up, how it tailed off dramatically. And then now that we've gone down, we had another increase in volume. So who knows? All right. Thanks, Zach. You are certainly welcome, buddy. Appreciate you as well. Miko says, "Feel better, Greg. Take care." Thank you, sir. Let me know. Let me know about the recording. Okay. Look, in the absolute worst case, Miko, we'll just we'll do a little refresher course that you can record again All right, so don't worry. We've got you covered one way or the other. And Bing He says thanks. Thanks, bud. All right, thank you everybody for coming. Really appreciate it. Have a good rest of your day. Be careful. Be safe. Call that person that might like to hear from you and check in on them. And I will see you tomorrow during the last hour of the trading day. Thanks. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.